Let's get a check-in of the markets now. Joining us from CommSec is Tom Piotrowski. Tom, great to see you. Markets reopening today. What can we expect?
Well, Danica, they've been open for a couple of days, of course. Great to see you. Happy New Year. The market's going to get off to a decent start this morning. The futures are telling us that we should be up by about 1% when we kick off. So the thing that stands out is the contrast to the way that we've started the year compared to the way that we finished. The market took quite a knock locally in the last several weeks of the old year, and that was the case more broadly where stocks were concerned. But last week up by about 1%. We're going to be up by 1% according to the futures when we get started this morning. This all turns around a pretty solid outing last Friday where Wall Street was concerned. There was a lot of economic news out. Jobs growth was stronger than expected, but wages growth was below expectations, and there was a substantial contraction in the US services sector. So the bottom line, Danica, was that the markets concluded that the Fed would have to be less aggressive under those circumstances when it came to their thoughts on raising rates. There was a very substantial move lower for long and short-term interest rates. Short-term interest rates down by almost 0.25%, 0.2%. That's a big move lower, and that's what sustained the stocks. So we had the S&P 500 up by about 2.3%. The reopening of China is also a factor that's been sustaining a number of sectors, the mining sector and the consumer-facing stocks locally. We had big gains for the travel-related stocks last week. Webjet and Flight Centre were each up by around 4%.